Are you in the process of buying or selling a home and you want to get some clarity around the closing costs? Because you know that they're going to be there and you know you're going to be expected to pay them. Maybe you've been given a few estimates from different lenders and you just don't understand why numbers are so different and they're not matching up. Closing costs are confusing and they're quoted in a lot of different ways from loan officers, which is why in this video, we're going to spend the time you need walking through and understanding what you'll be paying for, who pays them, and what they are, both for you as a buyer and if you're selling. Hi there, my name's Megan, and in case you're new to our channel, we share information for homeowners, home buyers, and for the loan officers and realtors that serve you. We'd love to have you subscribe. Give us some feedback in the comments about any questions that you have around closing costs, buying and selling a home, and the different costs associated with it. Let's start with what are closing costs. So closing costs are one-time expenses that home buyers and home sellers pay when a home is sold. And there are three primary reasons that I find closing costs can appear very different when you look at estimates that you receive from different banks and lenders. And I'm going to walk you through those. So the first reason that they can be so different is that the location where you're buying and selling. The state has different rules. So PA versus Florida, for example. In Western PA where I live, certain townships have their own tax that don't even happen on the other side of the state. And then in Florida, they don't have a transfer tax, but Pennsylvania does. So that can be one reason. If you're working with a loan officer who's not familiar with your area, that could be why a fee is or isn't on your sheet. Second reason is the type of loan that you decide to get. Conventional loans, government loans, investment properties, second homes, all of these types of loans have their own costs associated with them. And the third reason is the value of the home that you're purchasing or the home's purchase price. And the lender you're getting estimates from can follow different rules for all of these things or not know the things that need to be on there. So there is a website you can use to go and get an idea as well, and we'll put that in the comments in the description. But I'm also going to walk you through every area of a fee sheet that is the same for everyone, no matter where you're buying and no matter what you're buying. So let's head over and look at an estimate on my computer screen so that you can see the numbers in the sections that I'm going to reference during the next few minutes of this video. All right, so now we're going to look at actual closing costs for loans that have closed here in our office so you can look and see how to read a cost estimate, a fee sheet. It's called a number of different things, but when you walk through these numbers with me and you really understand them, if you understand that the categories and the items we're going to go through, you can look at any cost sheet and be able to put two and two together. So whenever you're getting pre-approved or qualified, the loan officer you're working with or the bank is probably going to give you something that looks like this. Ours is called an initial fee sheet, but they can be called a cost estimate or something else. When you actually lock in your loan, you'll get what's called an LE, a loan estimate, and it has the same numbers. It just looks different. This is the easiest way to look at these items and these numbers to compare them. And there are these sections. So I'm going to break them down for you guys just a little bit more. And we're going to go to, and I'll bring it up on the screen. So the top section is where it's going to tell you that you're doing, what kind of, it's a purchase that, what they estimated some put the FICO on there, the type of loan, your purchase price, the interest rate, the loan amount, how long your rate's locked into. And then now we're going to go and we're going to look at from that same estimate here. That was that top section right here on the top. Now we're going to go on the left side where it says lender fees. And I'm going to show you it up close and personal here. So lender fees, and I'm sorry, it still is a little bit fuzzy, but hopefully you guys can see this. So every single mortgage that you're going to do is going to have this section called lender fees, then the third party fees, and then the services you can shop for. Now, when you're looking at two different lenders' estimates, I want you to know that there's only one area on here
that the lender can control, and that's your lender fees. And so you'll see that it can be called a number of things. It can be called loan origination, processing fee, underwriting fee. There's also credits against it, which we'll go over. And that's all the lender is charging. The person you're working with, that's all they're charging. So if your estimates are different because of the other sections we're about to go into, then it doesn't matter who you go with. What the costs end up being is what they're going to be. You'll see on here, credit report, verification of employment. Now, a credit report is you have to have your credit pulled, and credit reports used to be, let's say, around $35. They have literally tripled in 2023. That's why we started increasing the amount up to $150. If it's just you as a single person, it'll be less. Verification of employment. We don't know if your employer, once you get into the loan process, is going to charge. Some employers do. So a good lender is going to give you all of your worst case scenarios. They're going to say, hey, if they charge something, this is what we see. Appraisal reinspection. When the original appraisal is done, does something need fixed, and does the appraiser have to go out? We have no idea. But that good lender is going to say, hey, this might happen, so this is an FYI. And then you'll see here, there's a processing fee and I think it's fraud services. I've actually not seen that one, but this lender can call it something different. And then the services you can shop for, the bottom one is the attorney or title agent you're going to use. And so you'll notice there's an endorsement for $450. There's a owner's coverage for $47, a closing or settlement fee for $585 on this one, title insurance that's based on the sale price of the home. And if a lender puts fees in like this, all these fees are going to be determined by the title company or attorney that you choose to use. And so it's just important to know that a lender's job, a good lender, is to give you what could you have to pay? And if you don't end up paying those things, great. We've overestimated, but you are prepared for what's going to happen on the day of closing. So now let's go to our next section, which is your taxes and government fees. That's determined by your state. So your state, the purchase price on this was $171,500. The state of Pennsylvania charges a 1% transfer tax to the buyer and 1% to the seller. So this automatically goes on there. And then the local county charges to record the deed and the mortgage. Those will always be that. Last section in your closing costs, which these are called prepaids, is taxes, insurance, and interest. The things that go into your payment that have to be prepaid at closing. So we'll walk through them. Prepaid interest. So if you're closing on the 22nd day of a month that has 30 days, you have 8 days left of interest. So a lender who wants to show a really low cost could put 1 day. I like to usually put 15. And then hazard insurance, that's homeowners. You're going to have to pay a whole year's premium up front. So let's say that your insurance was $1,300, then that's what you have to pay for a whole year. And then your escrow account, if you're escrowing, is where we then collect another. If you look down below, hazard insurance 2 months for $221 is putting some money into the escrow account. Property taxes. So if you look on here and we go down, property taxes, we quoted 12 months in the state of Pennsylvania. Usually you can get away with 10 months, but there are times during the year that 12 months is necessary. And it just always ends up being in between that range by what you have to pay at closing, what has to go into the escrow account, and what's due back to the seller. If you choose not to escrow, you can remove the property tax portion here or just do a smaller amount, only the amount due to the seller. As a lender, I see this being left out all the time because, well, I'm not charging it, but you still have to pay it. So you want to make sure that the person is telling you all the information. And so if you are escrowing, you should see something that looks like this area right here. And let's now go to the bottom. So now everything we just went through, estimated funds to close. There's the lender fees that were up the first section, the third party fees of $4,059, taxes and government fees, the prepaid and escrow account, and for a total of $13,398. Then if you wrote a deposit check when you put the offer in, that gets deducted. And then this buyer got seller credit. So the seller is covering most of these closing costs. So now you don't need $13,398 and your down payment. You only need $24,98, which is pretty awesome. And so that brings me to my last point on here. If a lender is charging a lender fee, that lender should tell you, because look, lender credits 4020 on another estimate that I had. And if I go back to that initial section, 4020, okay, it looks like lender fees are 4310, but that lender got you a $4,020 lender credit against it. So you're actually only paying like $290 for lender fees. So that's why these can be so confusing, making sure that you understand them, you're comparing the correct thing, and you want to build a relationship with someone who's going to look out for you and help you financially, because you will save the most on your mortgage more than anywhere else. And the last thing I wanted to show you here before we jump back and close out the video is Forbes had an article that really walked down states and how much as a percentage of the sale price the closing costs were. Look at Pennsylvania, 4.21, whereas Nevada's 1.5, Montana's 0.89. You've got Texas at 1.4. PA is a really high state for closing costs. Can you negotiate them, people ask? What I like to go back to is, can you negotiate with the state the transfer tax? Can you not have homeowners insurance for a year? Are you going to get away with not having an attorney help you at closing? No. The only things that can really, really be negotiated are the lender fees, which if they're getting you credits, you're in a great shape, and the third parties, do you have them or not? So, there's some good salespeople out there, but you really want someone who will educate you. And last but not least, if you're buying in Pennsylvania, this is the states in order of the most expensive. So Pennsylvania is number 2 of all 50 states. All right. Hopefully that helped, so you know the sections of these fee sheets.
All right. So I hope that was helpful. To summarize the costs and groups of costs that we just walked you through, the numbers can be different from 3 different lenders, even if they are for the same house, because outside of the 3 lender fees, all the other fees are changed by other people, third parties, people you pick that you aren't even sure what they're going to charge you yet. And we are trying to give you an estimate of what you will be charged. So it's always better to have someone who is thorough and puts more on there until you work through your home buying process and get that number down to where you feel comfortable. I hope that it made sense walking through that estimate that we did, because most of what's on there, the rest will be the same no matter what bank loan officer you work with. The more important thing is that you work with someone who's honest, educates you on what these costs will be. You don't want surprises on the day of closing, or to be told you need another $2,000 because they left it out and it's not what they charge. You need someone who's going to walk you through this and have it be a great experience. A couple additional costs I also wanted to mention is there are some things you're going to see on your fee sheet that wasn't necessarily in the one that we went over together on my screen, because I only went through one loan option estimate with the areas. So some of the loans that have other fees that maybe we didn't see on my screen is, let's say you don't do a conventional loan, but you do a government-backed loan like an FHA loan or a VA loan, USDA. There's what's called a funding fee. So every government-backed loan has a fixed percentage that is charged and collected by the government entity that backs the bank on these loans. And that fee is going to show up on your estimate, but most times you're not paying for it in your total at the bottom. It rolls into your loan. So FHA loans, for example, charge a single premium called a mortgage insurance premium. And it has been, for the past 10 years, 1.75% of your loan amount. So this means that if your loan amount is $100,000 after your down payment, FHA is going to add a fee of $1,750 that can either be paid at closing or rolled into your loan. And then VA loans and USDA loans also have one of those fees, but they're going to be different based on which government loan. Now, you might be wondering why I didn't mention things like home inspections or home warranties, real estate commissions. That's because home inspections are optional. They're not a requirement. outside of your own comfort and knowledge. And they are a smart thing to do, but we always say check with your real estate agent and do what you feel most comfortable with. Now, if you're buying a home that's outside of the normal cookie cutter homes in a neighborhood, you could also see some things on your estimate like homeowners association on your estimate if you're buying a condo. And then in Pennsylvania, real estate commissions are traditionally paid for by the seller when the home closes. So a buyer should not be covering the real estate commissions unless it is clearly explained why and how much that you're going to be charged for it. I see this sometimes when there's short sales or a bank is selling the home. If there is a real estate commission, make sure you read your contract because it could be in there. And this is because the costs are optional that I just talked about. You have a choice in the matter when you're going through your contract, or you at least need to know these things when you're talking to your real estate agent or your loan officer. So just make sure before you get estimates and not to just go with who has the lowest costs, because it doesn't matter sometimes. You're going to have the costs that you're going to have. Now, let's start wrapping up with who pays closing costs. And this is once again going to vary by location. But buyers, if you are buying in states like New York, PA, the closing costs are going to be much higher than in states like Florida and Colorado. And that's just because of how the states have set up their real estate transactions and transfers. Typically, you are going to pay your closing costs unless you clearly state you want to find a solution to have your closing costs covered. Now, when do you pay them? You pay 95% of your closing costs on the day of closing. There are a few items that can be paid outside of closing, and that's referred to as POS. And things like that are typically your appraisal or your homeowner's insurance. What I want to do is tackle that big elephant in the room that is, can I negotiate my closing costs? Can they be lower? Is there a way to get a break, a deal? And I think the most confusing part for most people is that that you've heard your friend or a neighbor talk about how they didn't pay any closing costs. And you want that same discount code, right? First, know that the closing costs that we went over need to be paid by someone. I always ask people that I'm working with, do you think you can call the state of Pennsylvania and get them to lower the 2% transfer tax on the house? You're buying a $200,000 house, $4,000, can you get them to cut you a break? Do you know a title company or an attorney that's going to give you a reduced rate and then explain to the government regulator why they gave you a discounted rate when they didn't give it to others like the regulations require? Probably not. For property taxes, can you talk to the tax assessment office in the next 30 days to get them to lower it? Not likely. You have to think of these things in terms of what you can control and change yourself, which you're not going to be able to control the costs that are there in the location you're buying and the house you're buying. But there are 3 ways I'm going to explain that you can get your closing costs covered as a home buyer. The most prevalent way is what's called seller's assist or seller concessions. And that's when you make an offer on a home and you ask the seller to pay for a portion of your closing costs. Now, during my 18 years helping home buyers and sellers, I would say that seller's assist has been used on at least 30 to 40% of the sales contracts for buyers I've seen. Now, unfortunately, in today's market, asking a seller for something like this when you're up against 10 other offers may make you lose the house. So until the housing market cools off a little bit, you might want to talk to your real estate agent about doing this. There are some closing costs that can be rolled into your loan. We talked earlier about FHA, government loans, and how they have a funding fee. This happens where it's that upfront MIP and you can choose to roll it into your loan and not pay it at closing. Same thing with refinancing. You can roll all your closing costs right into the loan. The final way that you can get your closing costs covered is what's called lender credits. And it's been a tool that we at CoLab Lending have used for years. So instead of asking the seller to help, you're choosing to take a slightly higher interest rate in turn for getting money back at closing from the bank to pay for some of your costs. Keep in mind that there are there are a handful of other ways to get help with closing costs, but those are the main ones that you want to try to focus on first. And if you want to know some of those other ones to look them up later, you can get a gift from a family member to pay for them. You can take a loan out against your 401k. You can sell something. So if you've been given an estimate and the amount at the bottom says that you need some ungodly number, make sure you don't give up and talk to another mortgage professional. Go talk to someone, the right loan officer, who will help guide you through the process of getting your costs, your closing costs covered, and into a loan program with a low down payment option. And for all of you sellers out there, I didn't forget about you. I saved the best for last, because the amount of closing costs that you will pay for is much more simple when you're selling a home. The items on the closing disclosure will only be a couple. And although they can add up fast, the average closing costs for a seller in, for example, Pennsylvania are between 7 and 8% of the home sales price. The most common closing cost that you're going to have is, you're going to see it on the paperwork, and it's your realtor fees or your real estate commissions. And that's because your real estate commissions pay both your listing agent and the buyer's agent. Then the second one is if your state has a transfer tax or a transfer fee, you're going to see that on there. You're also going to see a loan payoff on the closing disclosure, with the mortgage and anything that you owe has to be paid off. And then finally, your real estate attorney fee, which is not nearly as much as the closing costs when you're a buyer. So you can call and ask the attorney or title company that you're working with, how much do you charge to represent someone when they're selling their home? Typically what I've seen is somewhere in the $350 to $600 range. So in most cases, your closing costs will come out of your sale proceeds. So if your home has increased in value or you have been paying it off for a while, you will not feel the cost as deeply as buyers do. And if you'd like to learn more about how much your closing costs would be if you're buying or selling a home, all you need to do is click on the link in the description and someone from our team will reach out, schedule a time to talk with you. This is 100% free and no payments required. We also host a monthly webinar for buyers and sellers that you are welcome to check out by registering through the second link in the description. We will be there to guide you, answer your questions, point you in the right direction. I hope that this video gave you the insight that you're looking for and that you will join us for more information on next week's video. If you know someone who could benefit from this information, please share this video with them. Hit the subscribe and the bell to get further notifications. Otherwise, continue checking out all the other home buying and home owning tips on our channel, and tune in next time.